Hello, everyone, and welcome to this Nadex webinar on the basics of binary options. First, I'd like to welcome everyone to Nadex. I know a lot of the folks that are on this call today are new to Nadex. We do appreciate you being here, and you've come to learn about binary options today. And it's interesting that if you look at the title of the slide, it's the basics of Nadex binary options, event contracts, and prediction markets. And there's a reason why I do that. And if those are terms that are relatively new to you, you will certainly understand what those are after this particular session. Now, a quick housekeeping item before I get going, because I know I will get quite a few questions. One, we are recording this session, so you will be able to get access to the recording afterwards. So in case you have to drop off early or you would like to review this at your leisure, we are recording this session. You'll get instructions on how you can access the recording later. The second thing is this is also an interactive session. If you look at the on the right-hand side of your screen, you see a little question mark with a 1 in it. You can type questions in there. As I go, I will do my best to answer questions as we go. Now, if I don't get to your question, I will take a peek at the end and try to go back and make sure that I answered all the questions, but I'll make certain that you have, if I don't get your question, I'll tell you what you can do to get your questions answered if I don't cover the topic sufficiently for you. So this is an interactive session. Please, by all means, type questions in over there. The truth is if you've got a question, then there's a high likelihood that someone else has probably the very same question. All right, before I jump into today's session, I do need to share this disclaimer. This session, as are all of our education sessions here at Nadex, they are sponsored by our compliance department. And I need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything I say today as a buy or sell recommendation. I am doing this for your education purposes. And that will become abundantly more clear when I do what I like to call the off-roading session or section of this presentation, where we will jump over to the platform and do a very practical demonstration to make certain that you have understood the concepts that we discussed, and then you can apply them in the markets. All right, enough with that. A quick little introduction of me. If you've never joined some of our Nadex education or our morning market movers sessions, and I will talk about that because we do have morning market commentary every morning that we live stream on YouTube. I do that with one of our partners, Brian Caprice from Keep Trading Simple. And if you're not familiar with those, I will show you where you can find them and how you can catch the recordings if you're not able to join live. But we do live market analysis every morning before the equity markets open to identify potential hotspots in the markets for that day and what might be moving markets from an economic report or announcement or anything, global political events that could move markets and where you may see volatility. We will cover that later. Now, quickly on me, my name is Todd Rich. I joined Nadex back in 2019. I have been in the financial services sector for decades. I have traded on the trading floors, and then I have worked at some of the largest exchanges and brokerage companies. So when people say working on Wall Street, well, I didn't actually work on Wall Street because I was located in Chicago, but yes, I worked for the New York Stock Exchange. I would frequently have to go there and actually work in that building, kind of historic for sure. I did grow up in California. I got my BA and my MBA from UCLA. So just a little bit about me, I'd like you just to get a glimpse to say, hey, does this guy have any clue what he's talking about? I have been around for a while and I am familiar with the markets. So what are we going to cover today? Specifically, one, I am going to introduce Nadex. I'm going to introduce Nadex because we have a lot of new people and it's nice to put in context who Nadex is very quickly. I'm not going to spend too much time on it. And then I want to jump into what are these things? We are going to talk about binary options, event contracts, prediction markets, all these terms. We are going to talk about that. I will define them, and then I'm going to talk about how they work. What is the risk-reward relationship of each one of these? I am going to talk about how you trade them. And putting a position on is one thing, taking a position off is another. It is a very critical step in the process. I am going to discuss that as well. And then I'm going to talk about understanding how the price of binary options can fluctuate. And we are going to go through some examples so you can see how the price of a binary option moves around. We'll talk about some of the choices that you've got. And as I mentioned, my mom is from Missouri, or if I want to pronounce it right, Missouri, the show me state. I will show you. I am going to do a very practical demonstration, and hopefully that will help solidify in your mind, if you can see it in action, some of the concepts that we're going to discuss. And so let's jump into it. I'm only going to spend a minute on this. But who is Nadex? And Nadex is simply an acronym for North American Derivatives Exchange. Now, the reason I like to bring this up is Nadex, if you're looking at binary options out on the internet, if you're out on the web, there are a lot of different places that offer binary options. There are very, very few that are regulated, specifically regulated in the United States. We are regulated by the CFTC, another industry acronym, Commodity Futures Trading Commission. Now, the specific designations I don't think is really that important because it does get technical on whether we're a DCM and a DCO, which we're both, but we are properly regulated. And I like to hammer that home because there are places where you could potentially trade binary options that are offshore. And if you were to run into a problem or have a challenge, and there are some players out there who have some pretty nefarious behavior, I would say caveat emptor, buyer beware. Your recourse, if somebody does something nefarious or unethical and it's an offshore exchange, you probably have no recourse. But we are properly regulated. All those things that you hear about binary options where you can't get your money out of your account or things of that nature simply do not apply to Nadex. We are properly regulated by a US regulator. It is the same regulator that oversees the Intercontinental Exchange, ICE, who owns the New York Stock Exchange, or the CME, the Chicago Mercantile Exchange. Same regulator. We have to adhere to all laws, rules, regulations of the United States. Now, what did Nadex do? And our value proposition and why you're all here is because we offer products for the retail trader. And when I say for the retail trader, our products have a very low cost of entry. They're not expensive. You do not need thousands of dollars to get into Nadex markets. You can do so with tens of dollars or hundreds of dollars, and you can get access to price action. All of our products also have very clearly defined risk, so there are no surprises. You know what you're getting into in terms of risk reward on a trade before you enter the trade. So when you hear about futures exchanges and somebody getting a margin call or losing more money than they've got, that simply cannot happen at Nadex. There are guardrails, there are bumpers around every single one of these trades to protect you from some unfortunate event. So that is what Nadex is. That's what Nadex does. And we offer not just binary options. And if you're not familiar with knockouts, I'm going to throw call spreads in there. But if you're not familiar with knockouts, come to next week's session. It is probably our most intuitive product, and they are terrific products to access price action. Again, everything that we apply in terms of defined risk and cost of entry for a binary option is true of knockouts. There's simply a different way to access the markets, and people are here to access short-term price action in the markets. Before I jump over to binary options and we get into it, I do like to point this out because we have a lot of new folks. We even have people who've been around Nadex for a while are simply unaware that we offer a refer a friend program. The reason I like to point this out is a lot of retail traders like to trade with their friends or in small groups. I like that. The fact is sometimes, two heads are better than one, and traders like to have some support from their friends, and they do this collaboratively. If you invite your friends to join Nadex and you get your own personal link, notice that you would have your own individual personal link. If you were to share that with your friends and they used this link to apply for a Nadex account, and they do 5 trades within 30 days of applying for their account, we'll give them $100 and we'll give you $100. So $100 to you, $100 to your friend that you guys can do what you want with. You can take it out. You can place trades together. You can do that with up to 10 of your friends, and you can end up having up to $1,000 in your account to trade. So I do like to point that out because a lot of people aren't familiar that we do offer that program. So let's get into binary options, event contracts, and prediction markets. And again, I want to remind everyone this is being recorded and it is an interactive session. That question mark on the right-hand side of your screen, if you've got any questions as we go, please type them in. I'll do my best to answer them as we go. So let's first define what these things are. And they are short-term defined risk-reward contracts. All right, and that's what people are looking for. And they're based on something. They're based on an event, a statement, or a prediction. And that is, in the end, right? In the end, whatever it is, it's an event. What's going to happen with non-farm payroll? It's a prediction. Will the S&P be at a price? Whatever it is, in the end, there can be only one of 2 outcomes. And I emphasize in the end, and that'll become important later. But in the end, either the event occurs or it doesn't occur. Right? There's a prediction. You're making a prediction in the market, and either the prediction is going to be true or the prediction is going to be false. And that is why they're called binary options. Because in the end, it can only be one of 2 things. So this term binary options, people go, oh my God, I'm so confused. Well, you shouldn't be, because either it's true or it's not true. And when we go through what it is, you'll go, I get this. It's just a fancy word. Now, people use prediction markets because you can make a prediction as well. They're the same. Or an event contract, whether the unemployment rate is going to be above or below a certain number. That's based on an event. All of these things. And what's interesting at Nadex, unlike other binary option providers, is you can buy these or you can sell these, and we will get into the specifics of that. But it doesn't matter whether you're buying or selling, you know upfront what your risk is and what your potential reward is. Right? So there are no surprises. And when you talk about event contracts, whether it's around an economic event or a prediction market, what do you think is going to happen? All right, some of those, you're seeing some of these prediction markets become very popular, and they can be in all sorts of things. In fact, now there are prediction markets around box office receipts at a movie. Hey, will the opening weekend of Spider-Man have more than $10 million of box office receipts? That's a prediction market. But again, in the end, it's a binary option. Either the event happens, it's true, yes, Spider-Man had over $10 million of box office receipts in the first weekend, or it didn't. Okay, so hopefully you're clear when someone throws all these terms out there: event contracts, prediction markets, binary options. They are all the same thing. It's just using a different word, and some people would rather hear it as an event contract or a prediction market. But when you look up binary options, people say, oh my God, binary options, when the reality is there is no difference between any of them. It's simply vernacular. Now let's talk about what these contracts exactly are. And this is true of all of them. It's a statement, it's a prediction, and it's made up of 3 components. And I've already given you an example, but let's go through what these 3 components are. There is an underlying market. There is a condition, which is sometimes referred to as the strike price or the level. So these buzzwords, strike price, let's just call it a condition. And there's a time within a set period of time. So for example, the market, I used an example, the market was box office receipts for Spider-Man, right? And the condition was, will it be greater than 10 million? And in the first weekend. I mean, there's a time frame. Now at Nadex, we offer markets in equity indices, foreign exchange, commodities. So our market could be oil. And so the market could be crude oil, and the condition could be, will crude oil finish above $110 per barrel? And then there's going to be an expiration time in the next 2 hours, at the end of the day, at the end of the week. Right? Will the Nasdaq index finish above X price in the next 20 minutes? Will the euro, or will the pound yen, all right, there's a market, the pound yen, a foreign exchange product, finish above 1.23 in the next 5 minutes? So I think you can kind of get the idea that it's a prediction market, and it's got three components: a market, what is the condition, and a time frame. Now, binary options at Nadex trade between 0 and 100. It can't go any lower than 0, that's the floor. It can't go any higher than 100, that is the ceiling. But let's talk about what that number represents. All right, so when you're looking at a binary option and it has a number trading between 0 and 100, at Nadex, it actually stands for two things. We made it as easy as we could. But let's talk about what it truly represents to begin with. It's a true or false prediction. Okay, we're saying, will oil finish above $110 per barrel at the end of today? Either the event's going to happen or it doesn't. It's a true or false prediction. And in the end, if it's true, it will go to 100. And if it's false, it will go to 0. That is the binary nature. It's an all or nothing in the end. Either it will go to 100 or it will go to 0. Now, what does that number actually represent? And the easiest explanation is that number represents the probability of the event being true as predicted by the market. This is a marketplace. We have an open marketplace. Anyone can place a bid, anyone can place an offer, and you get people coming together and there is a consensus. So if oil were trading right at 110, and the prediction was, will oil finish above 110 at the end of the day? Well, since it's right at 110, that would be called at the money, there's an equal chance, an equal probability that it will finish above 110 as it is that it would finish below 110. So if that were the case, you would expect the price of the binary option to be trading at 50. Meaning there's a 50% chance it will be true and a 50% chance that it will be false. Right? And in the end, if it finishes true, well, it finished true, it's 100. It's 100%. It happened, 100% that it's true. And if it's false in the end, a 0% chance that it's going to be true, meaning it is false. So you will see the price move, and it will be the probability that in the end, at that moment in time, the chances that it will go to 100. So if a binary option were trading, say, at 20, the market is saying there is a 20% chance that it will finish at 100. It also means there's a 80% chance that it will finish at 0. And conversely, if a binary option were trading at 70, that's in the money, the market is saying at that moment in time, there's a 70% likelihood that it will go to 100, meaning there's a 30% likelihood that it will go to 0. Okay, now hopefully everyone's clear with that. Now, what I've put up here is this is a visual representation of what I was just talking about. If I'm looking at a binary option, and let's just actually look over here first. Let's just start with a buy. If I saw the price of a binary option, the bid was 46.25 and the offer was 49.25. So you know that you could sell it on the bid and you can buy it on the offer, right? This is the bid. I could sell it here. I could buy it here. Now, I will go through, do you have to trade on those prices? The answer is no. You can put a bid in between or an offer in between. I could put a bid below. But let's just assume these are the prices. The midpoint, the exact midpoint is 47.75. So right now, if I were to buy this binary option, it's telling me there's a 47.75% chance that it will ultimately go to 100. Okay, which means there's a 52.25% chance that it will go to 0. Now, I could sell a binary option. All right, now that and this, I haven't really covered it fully yet, but if you think the prediction is going to be true and go to 100, you buy it. If you think the prediction is going to be false, and this is something that other providers don't necessarily offer, you can take a bearish sentiment on a Nadex binary option, and I could sell it, and I'm looking for it to go to 0. Now, here's a bid-ask spread where it was trading above 50. It's 50.5, offered at 54. The midpoint here, interestingly enough, is 52.25. If you were to buy this, there's a 52.25% chance that it would go to 100. But here you can see we're on red, we're selling. If you were to sell it, it's 100 minus that. There's a 47.75%. If you sold this, there's a 47.75% chance it will go to 0 and you will be correct. Right? And I think I got the questions there. I think people are getting it. It's pretty straightforward. Yes, you are just trading a probability. You can buy it if you think it's going to 100. You can sell it if you think it's going to 0. Perfect. Okay, if anyone else has any more questions, fire those away. I got it covered. Now let's talk about the risk reward. I mentioned that price represents two things. Well, primarily it's the probability that the event is going to be true. And that can help some people. You know, if you've got an active market, it might help you make trading decisions anywhere because you can see what the market is predicting, but you can certainly do this in binary options. Now, the other thing that number represents, and Nadex made this easy, is each one of our contracts has a maximum value of $100. So not only does it represent the probability, it also represents the notional value of the contract, the actual dollars that are at stake. Now, you don't have to be able to do any of this math in your head. It's all shown to you very clearly on the order ticket, but it's nice to understand these concepts. So when you trade a binary option, the cost of the trade, what is it that you have to put up? And if you, and your collateral, what it costs you in terms of actual dollars, so when we say there's a low cost to trade, is the maximum risk of the trade. That is what you put up. And once you put that up, that won't change. There's no maintenance margin calls or any other margin calls or anything. Once you've put a trade on, you knew what your maximum risk is. That's what you had to put up to initiate the trade. Now, if you're buying a binary option, that's the price. So if you buy a binary option at 40, there's a 40% chance it's going to go to 100, and it also is you're going to have to put up $40. You're putting up $40, and in theory, what you're hoping for is it goes to 100, you'd make 60. You're risking 40 to potentially make 60. That is your prediction. If you're selling a binary option, it's 100 minus your sell price. So if a binary option were trading at 40 and you thought it were going to 0 and you sold it, it's 100 minus 40, it would be $60. You sell it at 40, it means you're going to have to put up 60 because it could potentially go to 100. There's a 60% chance at that moment in time it will go to 0 and you would make all $40. There's a 40% chance it goes to 100 and you would lose 60, but that's all in the end. That's the math in the end. And I keep focusing on that, pin that up, and just keep that in the back of your head. But you know what you're getting into before you enter a trade. You buy it, That's how much you have to put up. You sell it, it's 100 minus that. It's the probability. What you're looking at is the probability of your trade being successful, and it is also the dollar amount. It represents both. Okay, and now if you know what your collateral is, you should be able to do the math to figure out what your maximum potential reward is. But again, we do this for you on the order ticket. So we spoke about that. I will show this to you live on the platform, but let's just go through a simple example. Here's an order ticket for a binary option. Now, this slide's obviously a little old because it was back in December, but nothing has since changed on the order ticket. There's an indicative price. Back then, this is the S&P 500. Will the S&P 500, now it tells me what the indicative price of the S&P 500 was at this moment in time. It was 4659.33. It gave me an expiration date. It was the next day. I had 22 hours and 7 minutes in this contract. So I have an indicative price. I have a time. I have my condition. And the condition was, will the S&P finish higher than 4659.6 at 4:15 p.m. the following day? Now, in this case, the markets were predicting that it would go higher. All right. And I had a bid-ask spread, and now, if I wanted to buy, and I'm going to insert this in here. If I wanted to buy, do I have to pay $53.25? Now, I know that there are 200 of them offered at $53.25. That's what the little number in the upper left-hand, in the upper corner is. I know there's 200 of these contracts. If I wanted to buy one, do I have to pay $53.25? I could try to pay $52.75, and I could place a bid at 50. And then when I do that, this bid here, this number, it would go 52.75. This number would be 1, and that would be me. And if I were to put that bid in there, if someone wanted to sell one, they would have to sell it to me first. All right, it's price time priority. The first person to I would be the first one bidding at 52.75. And if I bought one at 52.75, I know that, and I bought it. Now I'm not guaranteed to fill. If I paid 53.25, I would buy one for 53.25, and it would cost me $53.25. But if I bid 52.75, it's telling me that that's what it would cost me. All right, it would cost me $52.75 to initiate this trade, and that is the most I could lose. And the most I could potentially make would be 100 minus that, which would be $47.25. Now, we also tell you before you place a trade that the max return on investment and your probability of in the money. Now, the probability of in the money is 51 5/8, 51.63. That is the midpoint. If I'm trying to buy this, if I were trying to sell it, it would be different. Now, if you're trying to wonder how we got the return on investment calculation, I am risking $52.75 to potentially make $47.25, and we have factored in your transaction fees. It's $1 a contract. We have factored that into this calculation, which will change the return on investment because you're going to have to pay an extra $1 to execute the trade. Now, here's an example of trying to go short. All right, the same thing is here at the time when I grabbed this example. There was only 1 hour and 39 minutes to go, but it was the S&P was at 45.74, and will it finish higher than 45.72? So it's already in the money, and I think it's going to keep going lower. I could try to sell one at 59. All right, I know that if I sold it at 59, it can only go to 100. My max loss would be $41. Right? And the most I can make is it goes to 0. I'd make 59, but my return on it, my probability, if I sold one here, the midpoint is 58. So if I sold it, there's only a 42% chance this will finish at 0 in the end because it's already in the money. But my return on investment is much higher, right? I'm only risking 41 to potentially make 59. All right, we do this math for you on the order ticket. Now, I have told you several times in the end, it is all or nothing. In the end, it either goes to 0 or it goes to 100. But, and I want to get your attention here. If I don't have your attention, I hope I'm getting it right now. An important rule when trading binary options. So if you take nothing else away from this, at least at Nadex, this is not true of all other providers, but at Nadex, just because there is an expiration associated with the contract does not mean you have to wait until then to see what happens. That is so important that I want to say that again. Just because there's an expiration on the contract in the next 5 minutes, in the next 20 minutes, in the next hour, next 2 hours, at the end of the day, at the end of the week, just because there's an expiration associated with the contract does not mean you have to wait until then to see what happens. You can choose to exit a position early. That is very important. You can choose to exit early. Now, why would you want to exit a position early? And there's 2 reasons why you would exit a position early. Number 1 would be to lock in a profit, okay? And number 2 would be to cut your losses. So let's just think about that for a second. You might, and again, this is about the cost of your trade and managing your risk. You might look at a binary option and say, I think this is going to go higher. And you might look at an out of the money option, and it might only have a 20% chance. So it's trading at 20. You're going to buy it, and you're going to buy it for 20 because you think it's going to go up and maybe it'll go to 100. Now, you know when you buy it, there's only a 20% chance that it will actually settle above that strike price and go to 100. Now, but you did think your opinion, your prediction was the price was going to go up. So you buy it at 20 and you are correct, and it goes up and it's right at the money. All right. It went right to the strike price that you were trading. Now, we spoke about this earlier. If the binary option is trading right at the strike price, there's an equal probability that would go to 100 or go to 0, so it's probably going to be trading around 50. Well, if you bought a binary option for 20 and you were right and it went to 50, you could choose to wait and see it. Maybe it'll finish at 100 and it'll be great. Or you can manage your risk and you can take your profit. And if you bought it at 20 and you sold it at 50, you would have made $30. You would have risked 20. You bought it at 20, you sold it at 50, you made $30. You're making 150% return on your money. You might say, thank you very much. I don't need to continue to risk. I don't know how much time to expiration. It can get very volatile. We're going to go through an example of that, at what can happen right at expiration and how quickly things can move. And you might want to say, thank you very much. I'll take my $30 and move on to my next trade. Now, it also works the other way. You might buy one at 50. You really thought, hey, I'm going to risk 50 to make 50, and you bought one at 50 and it went down, and now it's trading at 30. You might reassess and say, you know what, I was wrong. You don't have to lose all 50. You bought it at 50, it's down at 30 now. You could sell it at 30, take your lumps. You lose $20 and live to fight another day, and you've managed your risk. So you can cut your losses. So just because you initially had all that risk does not mean you have to actually lose all of that. And just because you have a potential reward, you don't have to wait and try to get all of that. You can take a partial profit, say thank you very much, and move on to your next trade. All right. So if I can't emphasize that enough, because often successful traders will, when a position's gone their way, take their profits. And part of being a disciplined trader is also cutting your losses if in the event that you're wrong, and taking your lumps when you need to. Now, I've just talked about closing a position early. We do allow you to do that. We have different mechanisms to allow you to do that. One, once you initiate a trade, you can set a profit target. You can set a profit target and it'll place a limit order. So in this case, I believe I had bought one and I said, hey, I'll set a profit, and and sell it. I think I bought it around 40 something, and I'm like, hey, I'll take a $29 profit. It'll place a limit order. And if it gets to that price and somebody trades with me, I'll be out of my trade and I'll have locked in my profits. Even if I stepped away from the computer and I wasn't paying attention, I said, I'll take a partial profit. I'll take $29. And in this case, I'll be leaving just shy of $18 on the table, but I was okay with that. That's one way you can do it. The other way is you can simply just close the position. We've got a button that says, just get me out. Oh, I bought one. Here I bought one for 53 and a quarter. I didn't mean to buy that. Just get me out. I know I can currently sell one at 50 and a quarter. It would be a $3 loss. I would just send a market order and get me out and say, oops, I clicked wrong. So we do offer, you can, making it easy for you to place a limit order to take a profit. And if you sell one, you can place a bid down below to take a profit. Instead of trying to have it go all the way to zero, you could buy it back lower and take a partial profit. Or we have a close position button. We'll just place a market order to get you out of your trade. Again, I'm going to demonstrate that shortly. Now, I did want to talk a little bit about how the price of binary options change and how they move. And I want to go through this example before I jump over to the platform. And there's a couple of examples here. I'm going to spend more time on one of them than I am on the other two. But again, this is being recorded, so you'll be able to go back and review those two other examples. But this is also important because you need to know how the price of binary options can fluctuate. Now, we already know that it represents the probability of an event being true. And that probability will be constantly changing. That probability is going to fluctuate. It is going to fluctuate as the price of the underlying moves and as time to expiration gets shorter. Now, it is important to understand that the price of the contract does not necessarily have to move in line with the price of the underlying. And I'm going to show you examples because that sounds a little counterintuitive, but if you trade traditional options, time to expiration and volatility will impact the price of a binary option. If there's a lot of volatility, it will impact the price. If there is no volatility, it will impact the price. If there's a lot of time to expiration, it will impact the price. If there's a little time to expiration, all of those things impact the price of a binary option. So let's take a look at some examples so you can see it in action. So the first example I'm going to give you, and I'm going to spend a little time on this one, is a highly volatile market. All right, and this is the Euro US dollar, and the prediction is, the question is, will it finish greater than 1.14 at 3 p.m.? And we've got a chart here of what the Euro US dollar did during this time frame, and this time frame could be the day. Let's just call this a day, but it could be 20 minutes. It could be a 5-minute binary option. Whatever it is, it doesn't matter. This is the chart of what it did during this time frame. And here's the 1.14 level. Now let's just assume this was for a day, makes it easy. And early in the day, there's a whole day. There's 24 hours until expiration. It was currently trading above 1.14. Well, it's above 1.14, so the market was saying there's a greater than 50% chance that it will finish at 100. So they priced it, the midpoint's 56%, that there's a 56% chance. Now, there's still a lot of time to go, and it's early in the day, but it's above 1.14, which is why it's trading above 50. Now, very early in the day, it immediately drops, and it goes below 1.14. Now, it did move. The price of the binary option did indeed go down with the price of the underlying. Now it's at 44%, but there's still a lot of time left. That is why it only dropped to 40%, because there's a lot of time for it to potentially come back. And any place above the line, it will settle at 100, and any place below the line, it will settle at 0. Now, let's skip ahead till midday. It's pretty much at the exact same place. It's moved, but now it's really kind of gone sideways. the price of the binary option has dropped to 36%. Now you're like, well, why is it 44% back here and 36% here? Well, that's because there's less time for it to get above one spot 14 and settle there. So this is what we would call time decay. It rotted away some because there's less time for it to potentially be true and for it to go to 100. Now things get interesting. As you get closer to expiration, the price of the binary option will get more volatile. Now we skip ahead and it jumps above. And notice now the move higher really dramatically changed the probability of it being true. It jumped all the way to 74% and it's above one spot 14. And it can even become more pronounced as we drop lower. I mean, what's really fascinating here is, I mean, look how, I mean, that's a $50 move in the price of the binary option, roughly $50 move. In fact, it's exactly a $50 move. And that's because there's so little time to expiration. At this point, they're telling you there's a 24% chance it's going to finish at 0 and a 76% chance it will finish at a 24%, I'm sorry, it's a 24% chance that it will go to 100 and a 76% chance that it will go to 0. I mean, a very low probability here. So the odds are that this is going to go to 0. However, it actually went above and finished at 100. Anywhere above here, it would be 100. Anywhere. If it was just above the line, 100. Any place up. Doesn't matter how high it goes, it's 100. And if it dropped way down, it doesn't matter how low it goes, it can only go to 0. So you can see how dramatic that price can be as you get those price swings. And a lot of traders are looking for that volatility. They want to see that volatility. They're not looking for the 0 or 100. They're looking for this $50 move, and they're like, hey, I think this thing's going to go down. They might sell this and look to buy it back down here. If you didn't, you would have missed your opportunity. If you had sold this at 74 and didn't close early, you would have had a winning trade that turned into a losing trade if you sold this. And if you sold this, it's so you can see how closing a position early can become important. I mean, you sold this because you thought, hey, there's no way this thing's going back up. I'm selling it. It's a low probability that it's going to get back up there. Well, yeah, you can risk it. You sell this, you're risking $74 to make you're risking $76 to make 24. You can lose it. So remember, these are just probabilities. They're not just because there's a probability. Remember, there's a probability that there's still a chance that it goes the other way. All right. Was that? I hope I didn't confuse anybody there, but you can see how the price of the underlying swings with high volatility and timed expiration. Now, I'm going to go through this one very quickly, just so you can see what happens with a low volatile product. This is the same prediction, the same example, but instead of the chart swinging all over the place, it was flat all day long. And early in the day, because it's below one spot 14, it was a 44% chance. Notice how it goes down. It's a 34% chance. This is what's interesting. The price of the underlying actually went up. You can see that we went higher. But even though the price went higher, the probability, the price of the binary option went down. Why did the price go down? It's a very low volatility environment. The market was giving it a very low probability that would get above one spot 14, and it was a high probability it would stay down below because it hasn't moved all day long. So this is where the price of the underlying, even though it went up, the price of the binary option went down because we're so close to expiration, and it's either going to go to 0 or 100. It basically decayed down to 0. Now, if you're in a low probability and it's above the whole time, it doesn't decay down to 0. It actually decays up to 100. And I'm not going to go through all this, but it's because anywhere above that line, it will settle at 100. And you can, even at the end of the day, even though the price of it went down, eventually it settled and it went to 100. As long as it was above one spot 14, it goes to 100. Right? So you can see now how volatility really does impact the price of that underlying, and so does time to expiration. All right, now at Nadex, something that's different than other binary option providers is that we do offer a lot of choices. We're going to offer you a lot of products, markets, whether it's commodities or foreign exchange or equity indices. And in fact, I'm going to give you a chance right now, if anyone would like me to go through a specific example today, maybe the S&P 500, maybe it's oil. If you want to just type into your questions, I will, when I jump over to the platform here in a second, I'll use that as an example. Or an FX product. Anyone wants to put it out, the first one in there, that's what I'll start with. But then I'm going to show you some other things as well. We do offer multiple underlying products, markets. We offer multiple time frames. We're going to give you a variety of conditions, strike prices, so that you can choose what suits your opinion the best. What market do I want to trade? What time frame do I want to trade? Do I want to trade 5-minute products, 20-minute products, hourly products, daily, weekly? You can choose the time frame, and you can choose what strike price. So you have a variety. Here's an example of just some of our foreign exchange products. You can see how on the left, we've got all these different foreign exchange pairs, and then we have all these different expiration times, and it tells you how much time to expiration. And inside each one of these, inside each one of these expiration, we're going to give you different choices, and you can see the probabilities of, this one's got to be the closest to at the money, is the one spot 1292. And in fact, you can see it's trading at one spot 1294. The reason I know that is it's right around 50%, right? And these are slightly out of the money to the upside, so they're going to be slightly cheaper if you're buying. And these ones where it's already above these levels, they're going to be closer, up towards 100 because they're already in the money. And we do offer very short-term 5-minute binary options in foreign exchange. This is, a lot of people love the volatility. I am going to go through an example of one of these. We're going to watch one live, and you're going to see how quickly the price of these can move. Now, before I jump over to the platform, I did tell you if I did not get to your question, I think I got to everyone's question. So hopefully everyone was clear with how I went through all that. I want to remind you this is being recorded. You will get access to the recording. You can go through it at your own pace. But if you've got any questions, please email customerservice@nadex.com. customerservice@nadex.com. I would also highly recommend you follow us on social media, but specifically YouTube. We have got there's a lot of content on YouTube. I mentioned those morning market mover sessions where we do live analysis. I'm going to show that to you. In fact, before I go to the platform, I'm going to show you that first, and then we're going to go to the platform, and we'll go through some very practical examples. So first off, this is the Nadex YouTube. You just go to YouTube, look for Nadex. If you come here, subscribe to the channel. If you subscribe to the channel, you'll be able to set up alerts to let you know when we add additional content. We have a bunch of educational content up here. You can peruse through it. If you're wondering, this morning we did some live analysis. You can see how every day it's under past live streams that I've got to put new ones in. This is the one for tomorrow, but usually we have them out a week, and you can set reminders that say, remind me when they go live. But if you're not able to join, it's every morning at 7:45 a.m. Central, 8:45 a.m. Eastern. You can join. If you missed today's, go back and watch it. Today, we actually covered a lot. They're usually about 15 minutes long, maybe 20. Today, we went a little bit longer because we had to. There was so much going on in the markets with the Fed move, the Bank of England move, OPEC announcement. There was a lot of things to discuss. By the way, if you go to videos, this is where you'll end up finding the recording from today. It'll eventually be up there. You can go back and catch any of our other past recordings as well. Okay, I would recommend though, go here and subscribe to the Nadex YouTube channel. Now let's jump over to the platform. All right, and this is where we're going to spend the rest of our time is on the Nadex platform. So what I'm going to do is I'm going to make this a little bit bigger so it's easier to see. Hopefully that helps. okay? And let's go through some examples. First up, I want to take a look. All right, let's go through a 5-minute binary option example to start. And I'm just going to pick the pound yen. All right, I'm going to change this to a 1-minute chart. So because we're in a 5, and let's get rid of this. Okay, and we can see. Let's look at all of these strikes. We can see that this is the pound yen, and here's our probabilities. This has got 3 minutes, just 4 minutes to go. This contract started a minute ago, and notice the different strikes. And the probabilities on these strikes is going to change dramatically. All right, now if I think that this is going to continue to go lower, I can sell one. All right, and I just sold one. We can take a look at my position. I sold one and it's going back up. All right, let's just watch here. I sold one at 52. All right, because I think it's going to go down, and it's kind of going my way right now. Now, I could close this position and just simply close it, and I would look at this. I would take an $18 profit, or I can set a profit. I mean, I could say, you know what? I want to buy it. I want to make a $20 profit. A 20. All right, I could place a limit order to buy it back, and notice now this bid, I just bought it back. That was me. I bought it back. I quickly made 20 bucks. All right, I did that, and listen, I'm not. These are not trade ideas, but this is how volatile 5-minute contracts can be. I'm now free to take a look again here. Let's see what's going on with the. I mean, it's going lower. Watch. I mean, this one below it. I mean, watch these ones down here. I mean, this is plummeting as this ticks. Every one of these ticks, these probabilities, as it's going lower. These ones where it was close to 50, these things are basically at 0. They're saying in the next 2 minutes, there's not a very high likelihood it's coming back. All of this was trading up near 90 when we first looked. And look at it now. It's just as this is the dollar yen. I'm sorry. The dollar yen, the dollar is seeing weakness. The yen is seeing some strength in these few minutes. Look how quickly the volatility on these, and these products collapsed. Now, could this turn around here? Maybe I want to take a shot. Maybe I think in the next minute and 53 seconds. No, look at this. It's just bottoming out. Now, if I thought maybe in the next minute we're going to get a quick bounce, and I wanted to try to buy one, say for, I mean, it's just going lower. Maybe someone will sell me one at 5. Here, I'll place 475. I was just goofing around. I don't know if I'm going to buy it. Notice if I actually buy it, I'm risking $4.75 to potentially make 95. That is my bid. I was just kind of goofing around here. If I don't like that trade, and I don't want to place that anymore, here's my order. I could simply just cancel my order, click on it and delete it, get me out. But the point here being is you can see how quickly the volatility in a 5-minute binary option. And as we get closer, I want to stay here for a second. The reason I want to stay here, look at this. Look at this. They're now giving this it just took off. I was trying to buy one at 4. Had I just paid 12, I could have done really well here. And look at this. It is skyrocketing. It came skyrocketing back. And there's still the volatility in this. Oh, now, something happened as you get about 30 seconds to go. The markets do, and that's because no one knows what's actually going to happen here. Because all of these are either going to go to 0 or 100. The liquidity can disappear in the last few seconds. Now, look at that. I think everything ended up going to 0. It settled. I'm going to refresh this, and we got a whole new set of. And now we got a new 5-minute clock. 5 new binary options. This is the at the money one, and you can go, all right, what's going to happen here? And as as this changes, you saw how volatile this is. Some people love that volatility, and this is what they're looking for. All right. And we do tell you, what's your risk, what's your potential reward, and you do not have to wait until the end of the 5 minutes to see what happens. You saw how I took a partial profit, and you can manage your risk, or you can lock in rewards, and you can see now how quickly the probabilities change as you get closer and closer to expiration. Now, I want to slow this down a little bit because that was a lot. I mean, in 5 minutes, you're seeing a lot. Let's take a look at a different contract. And what do we have here? This is the S&P 500. So let's just let's get rid of all of these strike prices. And I actually have a position in this one. I was kind of playing around. Let's close this position. I don't want to close all of it. I'm just going to close 5 of them. Take a partial profit. I took a partial profit. So, I mean, I was kind of playing around before we started. I thought, hey, maybe the S&P will bounce. Notice how we've got 3 hours to go. This is at the end of the day. All right. It tells me what I'm, how much time. It tells me the condition is 41. Oh wait, this is this my position? What is my position? 4180. Yeah, it tells me right here. Will it finish higher than 4180? 4180.8. So I know my condition. If it finishes in the blue, well, if I'm buying it, and you can see I bought 5 of these. If it finishes in the blue, it'll go to 100. If you thought there was no way, like forget it, it's not going to bounce, and you sold it, it would need to finish in the red for it to go to 0 for it to be a profitable trade. And notice though, I bought these at 14.75. I bought these before we started. It went up. Yeah, could I just take my profit now? I mean, I not a high probability that's going to go to 100, but the fact that I bought them at 14, I might just say, you know what, maybe these ones I want to set a profit target, and maybe I just want to take a $26 profit target. I could place my limit order, and oh, look at that, it already executed. I just locked in my profits, and I'm out. All right, and you can look at my order history. I bought them, I sold them. I was kind of goofing around. I took a profit, and I move on to fight another day. Do I want to trade other products? I mean, we do have in the FX, we have the 5-minute binaries. In the 20-minute binaries, these are all equity indices. Okay, so let's get rid of my position page pane here, but you can trade all of these binary options. I'm going to spread it out a little bit. These are 20-minute binary options. If I want to go into the indices, you can see I've got a variety of different expirations for each index. I've got foreign exchange across the board. Again, a variety of expirations that are beyond the 5 minutes. I mean, hourly, 2 hourly, midday, daily. Commodities, right? You've got different. You got a choice: crude oil, gold, nat gas. So we do give you a lot of choices for your binary options. Remember, you buy it if you think it's going to 100. You sell it if you think it's going to 0. The charts are very intuitive. If you're buying it, it will shade it in blue. If you're selling it, it will shade it in red. If you're buying, let's pick something that's not so. Let's pick something that's closer to at the money. If you're this is that one's settling. Let's pick. Yeah, right. There's 24 seconds to go here. I don't want this. Let's go to the daily contract. Sorry. Let's just go here. There we go. I know the probability. If I'm buying it, I think it's going to go higher. I'm looking for a rally in crude in the next hour and 30 minutes. I know how much I could potentially make, how much I could potentially lose, what my probability of success if I'm buying it, and what my maximum return on investment would be if I bought it and let it go to 100. Remember, you don't have to wait for it to go to expiration. Or if I think we're going to go lower and I wanted to sell it, where it would have to settle for this to go to 0, what my if I sold this right now, my probability is higher than 50% because we're currently below, what my probability of it being in the money is, how much I'm risking to how much I could potentially make, and what my return on investment would be if I actually sold it, all calculated for you on the order ticket before you place a trade. We are at the top of the hour. I want to thank everyone for joining today. Again, I want to remind you that this was recorded. If you've got any questions, I think I've answered everyone's questions. Please email customerservice@nadex.com to get any additional questions. And I want to encourage everyone as well, please join us. Go to YouTube, subscribe to the Nadex YouTube channel, and come join us for our morning market movers sessions, where we do live analysis for day trading. If you can't catch them live, you can certainly watch the recording. And if you want to get an idea of what we're doing, go back and listen to today's. It was, I think, 20, 25 minutes long, but we were covering a lot. Some days it's shorter when there's not as much happening in the markets, but we do try to help you by pointing out where the volatile, where the hot spots for the market that day are, and we do some headline analysis as well as a little bit of charting. I do that with a partner of ours, Brian Caprice from Keep Trading Simple. Again, great resource. Thank you so much for joining today. Hopefully you got a lot out of this session, and hopefully you'll join us in the morning market movers sessions on YouTube or on Facebook. I think we live stream them there as well. And until then, good luck in the markets, everyone. Thank you so much.